Welcome back, guys. Today we're talking about two high-yielding discounted dividend stocks. These ones are beaten down but have a solid dividend history and are looking like a great buy. Check these out. Stock number one, ticker UGI Corp. While this isn't my favorite between the two, the second one I'll talk about is actually my favorite. I think UGI Corp is a very interesting company, and there's a lot of potential here. So the main thing that happened with this one, the reason why it's so beaten down is because they had a pretty big earnings miss, which we'll talk about. We can see the past 6 months, it's down almost 27%. On the 1 year, down 31%. They had highs of about $44. And on the 5 year, their high was almost 60. So it's definitely been trailing down for a little bit, all from these different news pieces and whatnot. But let's look at their earnings really quick. The main reason why they declined was they had a 30% miss from expectations of their revenue for Q2. Now they were expected to have 4.4 million. They had 3.1 million. A pretty steady miss, but again, that was what was expected. So that dropped a lot, and they're down 10% from last year, where they had 3.5 million. So that was the main thing. They just had an earnings miss, a pretty common thing that we see in stocks. And so that caused a pretty steady sell off from about $32 to where it sits now about 27. It did bounce back a little bit and sold off again. So this one has a 5.52% dividend yield. Part of that yield being higher is because of this sell off, of course, as the price influences the yield. But I really think that this is an overreaction. Of course, it is bad when a company, when they have a miss like that, and a 30% miss is definitely something to not take lightly. But this sell-off is pretty steady, and the company itself doesn't have a lot pointing towards a huge downtrend in the future. In my opinion, which is not financial advice, this was just a pretty simple miss on their revenue. And as the market has been so crazy with fluctuations lately, maybe we do see the price of gas per barrel come down a little bit, and that will affect this stock. But you never really know. Either way, their year range, $26 to $43, pretty close to that 26 range now. And we can see that you're relatively safe, at least for the year range. I do think UGI will go back up, but you never, you can't speculate. You can't really tell. So let's look at their dividend history. A pretty phenomenal dividend history. They pay out quarterly. Consecutive years is 35 years of consecutive dividend growth, which is excellent. Consecutive years of payment, 35 years. So they are 35 years of consecutive payments when the sector median is only 17 years. Definitely something to note. They did do a stock split in 2014 and have been climbing and climbing with their dividend history. Let's see if they've ever done a cut. It doesn't look like they have. Nope, they have not. So 35 years without a dividend cut. They're making their way towards Dividend King. If they did become a Dividend King, I'd be watching this one really closely because the price would probably do really well up to that point. Now, they do have a number of years before that, but we can see what I really like to see is their pretty extensive dividend growth over the past couple of years. Even from 2019, the last 4 years, they went from 26 cents a share up to 38 cents a share. Pretty steady incline, which, you can't argue with that. Everyone loves dividend growth. You can go back and look at all their history. Overall, UGI is a really interesting one that I'll be watching. I don't think I own any gas companies that pay dividends. USOI, I guess, would be the closest one, but that itself is not the company. It's just an ETN. So this would be nice to kind of round out your dividend portfolio. You could have a little bit, with some energy, with oil and gas, with REITs, with BDCs. I do like to look for a lot of stocks with high paying dividends that aren't BDCs and aren't REITs because I have so many REITs and BDCs, and especially REITs that are so linked to the housing market and rental market. I don't like to have too many eggs in one basket there. That being said, let's jump into the next stock, which is Realty Income Corp, ticker O. This one is one of my all-time favorite dividend stocks. I think this is the first dividend stock that I ever owned, and for good reason. Even though I wasn't as knowledgeable as I am now with this stock, Realty Income has been performing really well. The past year, they are down about 13%, but they were at a monster high from $70 all the way up to $75, and have sold off a little bit, bounced around with the market. We go to their 5-year chart. We can see that nothing really to be afraid of, and their max chart, beautiful, 620%, trading from 1995. Now at the end of the video, I am going to compare these two stocks with a dividend drip calculator, and we'll see how those go. I love using the drip calculator, but more about Realty Income. So this is a REIT. It is one of the most popular REITs, if not the most popular REIT, which I believe it is, but I'm not basing that off anything, just kind of what I see in the market. and with people making content about all these different things. So let's look at Realty Income's dividend history. 10-year dividend history, they are a monthly payer, which you love to see. So in the last 10 years, they went from 18 cents to 26 cents per month. Now, absolutely phenomenal. We can see that their growth has been pretty crazy. Maybe they had a cut in 2004. 26 years of consecutive growth. So no, they did not have a cut in 2004. Could have just been a drop or a special dividend. Pretty phenomenal. They have 1 year of consecutive dividend growth. Yeah. And 26 years, my mistake. I'm sorry, they have 26 years of consecutive dividend growth. Guy, I'm going blind. And 26 years of consecutive dividend payments, making their way. They are a dividend aristocrat. I think that's 25 years. So they're ahead of the sector median on both fronts, especially the percent difference to the sector for years of dividend growth. I love dividend stocks. I love growth stocks. Dividend growth stocks are phenomenal. You get paid every month with ticker O, as well as the increasing amount of those payments and the price appreciation, which let's look at. Can you beat that? I know the dividend yield is a little bit lower at what? It's about 4%. They really should have that on here. Let's check. Their dividend yield, 4-year dividend average is 4.3. Not terrible. They have gone up the last couple of years. Their forward dividend yield now is about 5%. They have come down a little bit in price, which has pushed that up. I love Realty Income. Again, not financial advice. It's just a phenomenal REIT. The largest REIT I have in my portfolio. But now let's do the fun portion. Let's look at the comparison. So if we compare ticker O with ticker UGI, so this is going to base it off of the earliest you can purchase these with 10K invested. And this is pretty phenomenal. This is dividendchannel.com. I wanted to pull that up. So definitely a very useful tool. So both starting, so they have been paying dividends for longer than this time period, but we'll talk about it. So UGI comes out on the bottom with dividends reinvested. Ticker O comes out with $10,000 invested in 1995, which is actually before I was born. So that's not possible for me, but that would net you a total of $306,000. Absolutely insane. The average total annual return, 13%. That's between the dividend and price appreciation. Dividends reinvested per share would be about almost $50 per share reinvested. And the start price was $10. So automatically you're going to get a 6x return on your money, because of the fact that the price has 6x'd since they would purchase this in 1995. Now let's look at UGI. Same time period. The starting price was lower, but their ending price was lower, almost half to each. You start with a lot more shares of UGI because their starting share was so much lower. And now let's see. Dividends reinvested per share was about $20. Pretty insane. Average year return about 11%. Phenomenal stock through and through, UGI, with their history. Now they have been beaten down a lot recently, as we can see, where if we did this a couple of years ago, they would have been a lot closer. And at one point, UGI was actually above Realty Income, but that's because REITs versus the cost of petroleum per barrel. So just as of right now, UGI would be worth less, but it was a lot higher before this 30% drop. So that's why I'm talking about UGI as a beaten down stock. Realty Income, we can see, is a little bit beaten down. You can't see it as well on this chart because it's more steadily growing, but definitely interesting. Now going to where dividends are not reinvested, we can see that UGI and Realty Income are extremely close, with UGI barely coming out on top. No, with Realty Income coming out on top by what, $300? That's the closest I've ever gotten with one of these. So you can see there with dividends not reinvested, they're almost exactly the same. So reinvesting dividends actually did more for Realty Income, steady dividend growth there, and with UGI just kind of stayed the same. Definitely interesting seeing the percent return is almost exact, 0.01% higher for Realty Income over UGI, and overall you're $200,000 less positive because you didn't reinvest those dividends. So as always, guys, I recommend you reinvest those dividends, and that's where I'm going to call it for the video. Don't forget to like and subscribe if you like this type of content. Let me know. I'm doing a different editing style, different content style. Let me know what you think about that down in the comments below, and I hope you enjoyed this video. I will see you in the next one.